Morning traders, I'm Greg McKenna. Welcome to Markets Morning. It is the 5th of December, 20 days till Christmas, but Santa and his rally seem absent at the moment. President Trump tweeted that he was Tariff Man in a 4-tweet storm last night. I actually thought it wasn't too bad. He said we're doing a deal, but if we can't do a deal, then, we've got the tariffs. Now, we all know that. It's just that by being so overt and going bang, 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 he kind of walked everybody back from where they were just, a few days back. And I think the reality is he still wants to push hard. And the problem with that is, though, we've got narrative volatility to go with market volatility. And, of course, narrative volatility drives market volatility. But in the same way that walk back, even just the car tweet the other night, and then Larry Kudlow going, oh, no, maybe not, we've got to work it out, and Commerce Secretary Wilbur Ross saying something similar. What he's done is he's allowed the market to get worried about the different pages that the two parties were on, and then you've got this emerging bond market narrative with the collapse in 10-year bonds, which, just purely technical was going to happen. I wrote it to myself in my weekly 2 weeks back. More than that, actually. When we had that second failure at 3.25 and then it ratcheted down and then it closed below 307 and blah, 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 blah. So this rally's been coming and been building technically for a while. And so to the extent that it feels like it came out of nowhere, it hasn't really. So it's been building technically and then people are getting worried. Toll Brothers last night and what they said about their own business gave people a chance to exercise their concerns about housing. And that's been the big concern for economy watchers in the US. Housing's been the really clear weak spot. Now, it's interest rate sensitive, all those kind of things. And what Toll Brothers did was really reinforce that. You had the curve flattening. We've got the 2s10s now down at 11 or 12 points. It was under 10 at one point. You've got 291 on the 10-year. You've got 279, 280 on the 2-year. And people are starting to talk about recession again. Now, John Williams did not. The Fed president from New York did not talk about recession. He said, on balance, the risks are that inflation gets away. He said, on balance, the risks are that the economy does better, not worse. But he did say we're flexible and we'll see how the data goes. So that's as close as the Fed's got to the Fed put right here and right now. But the market got belted. We lost 3.2%, 90 full S&P 500 points. That's massive. As close to 800 as you can get, 799 for the Dow. We lost 3.78% for the NASDAQ 100 and 4.4% for the Russell. Really close. October lows are the key here. No need to throw the baby out with the bathwater unless or until those lows go. But if those lows go, that will fundamentally change the market psychology. And people will be like SocGen talking about lower levels. Now, you know my view if we use the S&P 500 as a bellwether. I think 2,500 medium term, 2,000 to 2,100 longer term. That's where I think we're going. I'm sure. So what have we got? Oh, what else happened? Forex was more volatile than the day-on-day closes look, and we'll look at some of those charts. US dollar fought back well. Bonds, as I said, are rallying. Emerging markets have done well. Crude got hit on the end. Emerging market currencies, I should say, did well, but now they've reversed a little, so we've got to keep an eye on that. If the Singapore dollar and the Chinese yuan reverse yesterday's gains, because that's where the US dollar woes really emanated from as Europe opened yesterday, then we might see some more upward momentum for the US dollar. Let's just talk about this. If you look at that chart, what do you see? I'd like you to do that because a big part of this is education. I'm not telling you what to do, I'm telling you what I think. That's just a range. Now, if that was an hourly chart, you go, hey, look, it's in the range. Because it's a daily, people kind of think of it a little different. If it was a monthly, and that's just a range, it's still in a range. Ranges are ranges. The thing about markets and charting is it's fractal. Whether you look at it on a 1-month basis or you look at it on a 1-minute basis, you can use the same tools if you've got a good process and if you've got the right tools. Now, when you go down to 1 minute and 5 minute, the probability of success lowers because you can get knocked out by shorter term volatility and all that kind of stuff. It's one of the reasons I like daily charts. 4 hours, not too bad, but dailies is kind of where I like to be. I was a hell of a day trader back when I was a lot younger, but these days, you know, I've got to do other things during the day as well, like exercise, research, you know, those kind of things. As you can see, need to lose a bit of weight. Anyway, enough of that. We've got a roughly 200-point range for the S&P 500 right now. 2,600, 28, 23. Unless or until it breaks either side of that, it's just a range. Where are we now? 2,700. Where's that? Right in the middle of the range. So, what's the signalling from that? On a 2-bar basis, the signalling's ugly, really ugly. Thank goodness that the US is out. Although I would argue that because the US is out for a day, the pressure remained into the close, unlike other days. All right, anyway, so that candle, look out for these kind of candles, these kind of doji candles that just hang there. Often a warning. You'll see one in the Aussie in a minute, but not in the Kiwi, which is quite interesting. So where to now? Well, if you go down a level, you can see gap filled, gap broke, trend line broken, and I'm not going to put a fib on that because it'll just make the other chart a heck of a lot messier, and MACD still going. So that does suggest further downside pressure, but we'll have to wait and see. Asia's going to have a shocker today. Overall, we're in the middle of a range. Either side of the range break. Want to trade intraday? Happy days. Medium term, right? Weekly don't actually tell you the picture I want to show you. That's a mess up there, but this is what I'm looking at. I'm looking at a period of at least range trading, but more likely a period of falls. Right, now we're going to keep going through here. Dow Jones, similar story. Big W here. Big hanging candle there, big down day, further downside by the looks of things. To me, the medium-term trend is still lower. On a weekly basis, what we're going to have now on both... You can't do this, though. Don't do this, but I'm going to do it anyway, because I just want to give you an example. All right, what have we got? So we've got the 15-day moving average is still above the 30-day moving average. So Jimmy R has not crossed. If we get further falls by the close of the week, Jimmy R is likely to cross. But we'll keep an eye on that. In terms of the NASDAQ with Jimmy R has crossed on the weeklies. Right, we crossed. And it looks to be under pressure. Now, look at that. That's a long-tailed, hanging candle after a big gap open. You know, this would be a re-acceleration. Stochastics in the right spot. Volume came in on a big down day. So we'll see. I honestly would expect the US administration to get out there and try and do their best. But it does seem like the Chinese, and CNBC's just shared a story which I've retweeted, so have a look at Gregory McKenna if you don't already follow me. CNBC's just retweeted, I've just retweeted a CNBC story that says the Chinese are a bit flummoxed about the grandstanding from the US and the way that they characterized it, which means the Chinese still don't get President Trump, which is kind of dangerous for the whole process. But I have to say, I know I'm already 8 minutes in, I have to say, this all turns around. This all turns around if they start buying soybeans, if they drop car tariffs. Then they're the concrete steps that Steve Mnuchin talked about. It may not be a sustainable turnaround. We've still got these ranges. You can see the similar thing for the NASDAQ as the others. I don't have the Russell here, but the Russell made a death cross a while back, which we talked about. In terms of our own market, 55.85 to 5600 has to hold. You know, downtrend intact, as I wrote yesterday. Under a lot of pressure. Ugly. 1% day off yesterday, and then 1.3% in futures trade last night. So that's a tough day. So ugliness abounds and will be under pressure. So that only puts us 75 points off. The physical only puts us in the sort of the 57.40, 57.50. So we're not banging on against the October lows. But you've got, again, the McKenna mantra. Remember the McKenna mantra. Respect lines and levels unless or until they break. And if it's an intraday break, then it's a small go with it so you don't miss out. But it's not until you see an end of day close that you can get really excited about it. Well, that's how I trade it anyway. You can trade it how you want. You can go with the right kind of stop loss method. You know, you could. I used to have when I used to day trade a lot. You know, back almost 30 years ago. I had a lot of stop and reverses, because if you get a break and it reverses on you, well, just get out because it's a false break. So that's the other approach to it. I tend, because I'm trading dailies and I'm not trading hourlies like I was when I was day trading, you could sit there and you could go, right, bang, I'm selling. Dollar index, for example, last night. I'm selling. It broke. Whoop, no, it's gone back up. I'm out, right? And you virtually got zero stop loss. Not exactly, but you know what I mean, right? So you're trading a move and then it reverses. Well, get out. That's the way it works. These days, with longer term stuff, it's kind of more position style approach. You can still use the monthlies. And I've got some shorts on the spot on the S&P and I've got some shorts on the SPY based on monthlies. But they're still the same charts, as I say. A chart is a chart is a chart, whether it's a monthly or a weekly or a daily. Anyway, I'm gibbering on. The DAX just can't do it. Look at that hanging fellow there. Or LAS. LAS or Laddie, whichever you want to call it. Still in a range. 11.7's got a break before it goes up. 11,000 on the downside. A break below 11,000. And I've actually got 10,000 as a target. That goes, shoulder, head, shoulder. That's about 2,000. Take it off the bottom. You end up with 10,000. Take it off 11,700. Right, let's get into foreign exchange. Right, Euro, that's the 4 hour. I was just looking at that before when I was writing the piece. So I'm going to blow this up so you can get a sense of what I'm trying to talk about. That's an ugly candle. That is the bulls getting their backside slapped. That is the trying to drive it higher but can't actually get there, turn around and look the other way. Now, the reality is also that unless 113 breaks, we're just mucking around. We're just moving around. So from a trading point of view, we didn't get a lot of communication other than that the US dollar does have some support on pullback and the euro has some offers up above 114. Remembering 114.40 was the 38.2% of this move. 115.15 is the 50%. So in that 114.40 to 115.50, and even as far away as 115.85 is still consistent with lower levels. But if you have a look at it on a weekly, it's still got to get down and through 112. What does that look like? It does look like, high, lower high, lower high. It does look like the downtrend's intact though. So we'll keep an eye on that one. Dollar yen. Now, if you look at a 4 hour chart of dollar yen, you'd go, oh, that's disappointing. That was a really long-legged candle on the 4 hours, which it was. I'll show you. That is disappointing, right? So now, from a very short-term point of view, you say, well, okay, sorry, I had to lean forward here. A break either side of that is the short-term way. But in the medium term, so the daily chart, or the slightly longer than the 4 hour chart kind of thing, that's quite an engulfing candle. That is a very bearish candle. And that suggests 112.30 to 111.80 are levels. Now, both of these are only two touch. So you've got to keep an eye on that. I'm going to get my skates on because you're probably sick of seeing 20-minute videos. Please let me know if the videos are too long. Let me know and I'll shorten them. Just go bang, 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 bang. But these are made for you. So this is your product, my product for you. So please feedback if you have any. This is weekly. So sterling, Brexit. The Brexit outcome is now less certain than it ever has been. And the reason I say that is that there is a court case in Europe where some opponents of Brexit have said to the European Court, how's about if we just feel like rescinding Article 50? Can we do that? And the Advocate General for the court, who's not the final arbiter, but people believe has some influence or knowledge of the outcome, suggested last night that if Britain wants to rescind Article 50, it can. Now, what does that mean? Well, it means that it's not hard Brexit or Theresa May. It's hard Brexit or Theresa May, or we can have another referendum and rescind Article 50. What does that do? Difficult, isn't it? So the Remainers, they're not going to vote for Theresa May because they want to stay in. And Jeremy Corbyn, who actually wants to go out, is going to get wedged. For the hardline Conservatives, who want to go out, but think May's plans are dud, they might actually vote for May and her plan because they don't want to stay in with a second referendum. So it's all much more fractious. So it's no surprise that after losing a contempt vote on the floor of the Commons, that sterling fell to 126.60. 61 to 62 is the low. That's the same low as we've got for the range. I'm running out of voice already. If it breaks and holds on a daily basis, I got 120 or thereabouts. As I've said to you weeks ago, options are the way to play this. You know, option volatility is going to be more expensive now, particularly to the downside. You know, I was talking about options when it was at 130. You know, 6 to 10 big figures is what potentially we get from whichever way. From here, you got 6 down. You've probably got 10 up if they stay in. So options may not, pardon me, may still not be a, pardon me, a bad idea. Aussie. So remember I talked about that candle yesterday, how it's hanging now. I'm going to blow this up. This is bearish engulfing. This is slightly new high, and then we've come down. That looks like it's going to go lower. Now, today, we've got GDP. Expected to print 3.3% year on year, 0.6% quarter on quarter. That's really solid growth. Really solid growth. Will it have any resonance? Well, if it prints 0.8 and we get 3.5, well, then it has to. If it prints 0.6 and we get 3.3, then I'd argue that it's probably baked into the cake. If it prints 0.4 and we get 3.1, that might be bearish. And if you have a look at what copper did last night, the Aussie could be under pressure. My sense is, I think, as I said yesterday, that the Aussie will go back down and lower. But last night, tried to take out 74 cents and found it too strong, and that looks like a bearish setup to me. In terms of dollar CAD, we broke down, we broke up. So if you use my trendline idea, you would have lost money there because you would have sold. We wouldn't have lost money. You know, you sell if you didn't have a take profit or a trailing stop. As it's come back, you've just gone, oh, bugger it, I'm out. That's the easiest way. That's the way I used to trade trend lines like 30 years ago when I was a kid, when I was just learning. 88, no, it would have been 27, 28 years ago. So I started in markets in 88, and anyway, it doesn't matter. So what you can see there is it's trying to break back higher. Watch that. And of course, oil fell out of bed after the API data. But if dollar CAD can rally, and if dollar Sing can rally, and if dollar Yuan can rally, Kiwi. Now, what was the high last night? That's an ugly candle. The high was 69.69. Well, it didn't get quite to the 70 cents that I thought it might, but that candle is now instructive. If we get down and through, I'm not going to get too bearish on Kiwi unless we take out 69.17, which would then suggest it's on its way back down to 68.60. Small points or pips. I hate the word pips. I'm an interest rate trader, so I think of 68.60 to 68.61 for me is a point. I know it's not, but anyway, yeah, but big percentages because of the value of it. So keep an eye on that one. In terms of the yuan, it's broken down. It's got to get back up to 689.5 is what I'm calling it. Gets back above 689.5. US dollar is in recovery mode. Likewise with dollar Sing, right? If it gets back above sort of 136.85.90, which is what I've written in Markets Morning, the written piece, then the dollar's starting to heal. And we'll see about that. Lots of people don't like the dollar. That is the anti-dollar narrative. Right, 18 minutes, I better get skates on. Gold's trying to break out. This is the perfect setup for gold to go to 1,300. 12.95 to 1,350 if it breaks that trend line. That's all I'm going to say there. I've written about it. Silver, still in a range. Not doing anything with silver. Just trading the range. Copper, 10 cents. 10 cents in 2 days. Well, 10 cents in less than 2 days. But, right, rejection again. If that breaks, it's going to be one hell of a move. But rejection again. It's now focused back on support at 272. 272, 264, 66, 255. If copper breaks, you will know that people are not focused on the upside of the trade deal. Right. WTI, bad day. That candle was white when I wrote my piece this morning. Then API came out about 8:30 as I was just finishing, and that's knocked it down. So the key thing is here, right? This is trying to bottom. This is a market trying to bottom. We have to see what the Russians say. They don't seem to be on the same page as the Saudis. The Iraqis are apparently not on the same page as the Saudis. Qatar, which doesn't create that much, but enough, is already out of OPEC. The Iranians are saying, you're not going to be able to do anything. OPEC's fracturing because of the Saudis' actions. They're not. It's going to be interesting. They may not do anything, in which case, if the low gets taken out, it'll be Rover, go fetch the duck. And you'll be talking about 45.5 or something like that. In terms of Brent, similar story, trying to form a bottom. We'll have to see what OPEC does. You know, this is all been the setup, right? We haven't run as far. After that candle, if it took out the day before, which is 60.56 and it's at 61.25, that would probably, for me, right here and right now, be an exit of at least half the posi. Similar for WTI, based on the same sort of thing. Bitcoin not going anywhere, stuck in a range. Bigger fish to fry. Done all those. Just quickly on soybeans. So soybeans, can never look at it like that. Not enough charts. So we had that big reversal. We've gapped back down. Haven't quite closed the gap. This for me is going to be one of the bellwethers, which is why I've started talking about it. Just keep your eye on soybeans. I'm pretty sure the Chinese are going to buy some. We'll have to wait and see. They need to buy some. Anyway, that's it from me. 20 minutes is probably enough. GDP today for Australia. US is out tonight. No Chairman Powell testimony. It's been postponed to a date to be fixed. Bank of Canada interest rate decision. They're the main things. Have a great day, and I'll be back tomorrow. Bye for now.